Hello everyone, welcome to High Yield Mastery using the CEF or Closed End Fund Masteries Super Screener and Interactive Report. I'm going to try to get through this video as quickly as possible. But before I begin, if you are just now being introduced to the Closed End Fund Mastery Super Screener and Interactive Report, I'd like to quickly share what CEF Mastery is all about. CEF Mastery or Closed End Fund Mastery focuses on three goals: distribution sustainability, long-term appreciation potential, and being well positioned for future distribution increases and special distributions. Quickly looking at goal number one, distribution sustainability. The CEF Mastery Super Screener tracks 326 of the highest yielding closed-end funds trading today. An example I like to use is if you were to put those 326 funds into an index fund and you were to own 100 shares. Since CEF Mastery Super Screener went live in May of 2020, shortly after the crash in March, those 326 high yield funds would have experienced or has experienced 391 distribution cuts. If you were to own 100 shares of the broader closed-end fund index, to date, you would have lost a total of $6.42 in distributions for an equivalent of $642.18 per quarter, or nearly $25 or just over $2,500 a year. Likewise, if you had an index fund comprised of closed-end funds preferred by CEF Mastery, since May of 2020, of those 391 cuts, you would have experienced a distribution cut of just 3 cents, or the equivalent of $12.60 per quarter, or nearly $50 a year. That figure does not include the numerous distribution increases experienced by CEF Mastery's preferred funds, which are an estimated $2 per share, or roughly an added $200 per quarter, or $800 a year. Now, the purpose of this video is to focus on goal number two, long-term appreciation potential, which brings me to the question: does the CEF Mastery Super Screener outperform the high-yield closed-end fund market overall? Now, in our quest to find the answer to that question, I will also be showing you how you could at any time quickly find the answer to this question yourself. So let's begin. The most recent CEF Mastery report to come out included closing market data as of February 4th. I, however, have opted to use the previous week's report from January 28th, when prices were a little more suppressed. 2.7% for the Dow, 4.6% for the S&P, and 5.6% for the NASDAQ. Near the end of this video, I'm going to put up a chart that presents the results of all the different scenarios regarding 3-year NAV return, the 5-year NAV return, and the long-term NAV price change. We'll be comparing the CEF Mastery preferred picks to the overall market of the 326 separate funds, and to the yellow funds, which are the average ranked funds, and the red funds, which are the below average ranked funds. But to keep it simple, I will only be demonstrating how to find the 3-year NAV return performance results. Now, to answer our original question, does the CEF Mastery Super Screener outperform the high-yield closed-end fund market overall? We first need to know how the overall closed-end fund market performed. I'm going to quickly show you how to do the 3-year NAV return, and you would just simply repeat the process for the 5-year NAV return and the long-term NAV price change. And if you're not really interested in going through the trouble to find the results, as I mentioned, the results will be displayed near the end of this video. So to get started, we first need to find the overall market results for all 326 funds. And to do that, we put our cursor in the first cell of the 3-year NAV return column. You hold down the Shift key, hit the End key, and then the arrow down key, and it takes you all the way down to the list. Now, if you notice down here at the status bar, there are certain statistics. As you can see, the average is 10% for all 326 funds. It has a sum that's not really relevant to our particular subject. If you are unable to see these particular stats on the status bar, the easy way to pull these up is to hover over the status bar right-click your mouse, and you can see a whole host of different statistics and features that you can include. What we're really concerned about is the average and the count. So just make sure those are already clicked. If not, click them. Getting back to our example, now that we know what the overall closed-end fund market is doing, averaging 10% per fund, now we want to know how the CEF Mastery preferred funds have performed. And to do this, we want to filter out the funds that only meet the CEF Mastery's preferred criteria. So we would do that starting with the score. And to keep it as simple as possible, you would click on the filter button. You can filter by color. We already know that any score in green is a preferred fund. So you click on the green. If you go down to the status bar, you can already see there are 120 funds and they average 14.2%. So we already beat the overall market. But that doesn't finish the equation. Next, we're going to want to filter out the second stat that makes up a preferred CEF Mastery fund, which is the final score. And again, you click on the filter feature. You can filter by color. Click on the color green. If you go down to the stats bar, you can see that the average return right now is 14.9% of 106 funds. And then the final part of the equation is the estimated number of distributions remaining, which is 6 or greater. And again, you can filter this by color because 6 or greater will always be green. If we go down to the stats bar, you can see that the average return is 16.6% on 92 funds. So again, in the chart near the end, we list all the different case scenarios and how they compare to all the different scenarios. But for now, let's just take this particular example one step further. What if we were to exclude all of the funds that had a long-term NAV price change in the negative? And to do this, all we would do is click on the long-term NAV price change. And again, you can filter by color because anything over 0 is green. And if we go down to the status bar, you can see that the average return is 19.5% from only 65 funds. Okay, now I think I've proven that the CEF Mastery Super Screener outperforms the high yield closed-end fund market for the 3-year NAV return. But how did it fare to the 5-year NAV return and the 5-year NAV price change return? In this chart, we have the results for the overall market, CEF Mastery in green, the average performing funds, which are in yellow, and the below average performing funds, which are in red. We've already done the 3-year NAV return. You can see CEF Mastery had a commanding 6.6% return lead over the overall market. The average performance came in at 8.10 and the below average at 5.2%. For the 5-year NAV return, I found this interesting. Even though CEF Mastery outperformed every single category, they all came in lower than the 3-year. The most surprising thing that I found was for the NAV price change return. CEF Mastery was the only one that had a positive return at 13.87%, while the overall market was down 5.69, the average was down 11.45, and the below average performers were down 22.27%. And finally, I did an NAV price change return X all negative returns. And you can see once again, CEF Mastery takes a commanding lead over the overall, well above the average performing funds, and below average had 0 funds that were positive. They were all in the red. Now this is the really cool part. A skeptic might look at these results and think to themselves, naturally, CEF Mastery is going to outperform every category because the best performing funds are going to inflate the fund's score. And that's a very interesting point. However, CEF Mastery's score has nothing to do with the fund's past performance. It is purely fundamentals. Now, there are performance characteristics of a fund that CEF Mastery takes advantage of. For example, the earnings surplus deficit column. This column reflects a fund's lifetime of profit minus expenses and distributions in proportion to a fund's capital. For example, the fund RFI, which we have highlighted here, has an earnings surplus deficit of 50%. Now, let's say, for example, if RFI had $1 million in capital, 50% of that would be $500,000. So that would be an extra $500,000 in investment power. Also, the most interesting thing about this statistic is because a fund pays out most of its returns, and in many cases, a fund's lack of returns in distributions and expenses, it would take a fund several years to accumulate a 50% return on its capital. So naturally, the higher this number, the more it contributes to a fund's score. And as far as performance is concerned, regarding scoring, the only place CEF Mastery Super Screener uses that is in the final score, which is the result of the fund's performance since the report. And then its performance score is then added or subtracted to the fund's final score to give the end result. Finally, here's a table of all of the end results for all the returns, the outperformance from the underperformers, the outperformance from the average funds, and the outperformance from the overall market. In this table, I did take things one step further by breaking down CEF Mastery's outperformance of the overall market by qualifying score, which had 120 funds, and these are the results. And then coupled with the score and the final score, which resulted in 106 funds. And then CEF Mastery, which is the combination of the score, final score, and estimated number of monthly distributions remaining. I found it interesting that, except in the case of the NAV X negative returns, which were all basically the same, that adding each qualifier slightly improved the overall return. And in the case of NAV return, significantly improved, which again, I'll point out, CEF Mastery in this category were the only funds to have positive returns. Anyway, you can pause this video and look over these returns at your leisure. And that'll be it. If you learned anything, please give the video a thumbs up. If you're not already, click the subscribe button for future videos. Thanks for watching. Please take the opportunity to take advantage of your one free report just for the asking. Send your request to TheDividendTimes, one word, at outlook.com. Subscribe to your 1 month free trial with an annual subscription. All the links are listed below. Thank you for taking the time to view my videos. I hope to see you in the future. Thank you and good luck.